Okay guys, today we're going to be taking a look at Cardano's ADA. We're going to be taking a look at the technical analysis, and I'll be sharing my thoughts and opinions on what I think is likely to happen next based on what I see within the data. As I get into this, smash the like button, subscribe if you're new, and let's get started. So here we have Cardano's ADA paired up with USDT. We are on the 1 hour Binance chart to start. Now, if you're in the Discord as one of our Discord members, that's the paid membership stuff, then you would know that we were charting out this high area here over the last few days, 93.17 to 94.2. This was our fifth wave high point and where we were expecting to see rejection and where we were suggesting to go short on the market. And of course, we're going to be looking at those pretty aggressive drops. As you can kind of see here, this has played out quite beautifully so far. Personally, my stop loss, take profit, sorry, would be around that kind of 200 exponential moving average because I expect that we're going to see a bounce from there. So let me get into the whys I think all of these things. To start with this, we're going to just take it to a 15-minute time frame because I'm expecting a little bit of a bounce before we continue this move to the downside. This is known as a 5-wave drop to the downside. At least it kind of gives me those kind of images. Now, the internal workings are a little bit off, but if we take it to a 5-minute time frame, you can really see how these are nesting positions, really nesting us in for further decline to the downside. But we are almost done. So taking a look back at that 15-minute time frame, you can see we have a wave 1, wave 2, all of this is a wave 3. We're looking for a move up and then an additional drop. Take it back to our hourly chart. That basically means that what's going on here is that we have a wave 1, wave 2, wave 3 coming down towards our 200 EMA. We look for a bounce and then we look for another shakeout. Once that shakeout happens, we then look for 3 waves up. Retracement's typically about 50% of this move. So we would look for, let's just take that existing low. Actually, I'm going to take it a little bit lower. Yeah, I'm going to take it towards kind of 88 cents approximately, 88 and a half, something like that. You can then see that that move to the upside would actually be more in line with that 50 to the 786. It's quite a wide area. Let me just show you what I would be looking at for the retracement. Would basically be this previous area of resistance. And I think what we'd do is we'd be looking to go back up towards that range. Okay, so all in all, let me just remove that. We're looking for a bounce, probably up towards this range anyway, another drop to the downside. And once that drop to the downside, which relates to the wave 4, meaning that we can't predict this until we know where wave 4 goes, but you get an idea, a rough idea. The higher that wave 4 goes, the lower that wave 5 goes, the shallower that wave 4 is, the shallower that wave 5 is, right? So we can't predict wave 5 until wave 4 is there. And wave 4 typically goes up 38.2% of this move here. So we would be looking for around 91 cents, natural kind of rejection point. And if we do see 91 cents, and I'll give you a rough estimate for that next move to the downside, which would be between 88.35 and 88.96 on that low side. I'm just going to roughly draw that in. Just a rough target for you guys to give you something to kind of be thinking about. There you go, right? So that's kind of what I'm looking for. Once that's complete, next would be 3 waves up, and we'll be looking to tap into that additional range up here. And then from there, I think we'll be looking for further decline, another 5-wave move, because you can't have 5 waves on their own. And once that's done, guys, that there would actually then mark the end of an ABC structure. A, B, C. It doesn't have to go as deep as that. Gives you a rough idea to what is going on if I do it something like this. Okay, cool. The higher that the B wave goes, the higher that the wave C wave goes. So you kind of get the idea. The more bulls that kind of have conviction for a breakout situation, looking pretty good. Now, it's possible, of course, that we don't complete this wave 4 and this wave 5. And if that is the case, then actually all of this is just corrective and we actually break that bearish pattern by moving out higher. Our line in the sand for the bulls would be 91.6. If the price action rallies higher than 91.6 cents, hurrah, we don't have to worry about that pattern playing out and we can just now continue our run to the upside. So it's all to play for. Okay, so I'm not here to say one way is going to go the other way or better than the other way. I can say probability wise, we should be tracking the bearish movements, but the bulls have a line in the sand. And if they really do want to rally behind ADA for whatever reason, then basically 91.6 is the target for the bulls. The bears, on the other hand, they're going to target out 88.35 cents. Then we relief rally, then we drop again. So that's kind of the hourly chart. It's very interesting, at least to me, because our cumulative range was down here. We were hoping to be down here for longer than we actually were, but that wasn't the case. This was between 80.05 and 86.33 cents. This is an area that we did take advantage of for long positions, and we did rally up quite nicely. But for the most part, we've started to see this bearish turn in the market. Now, stochastic RSI is in the ground, meaning that we are likely to see a reversal. So if you really wanted to snipe out the long positions, you'd want to do that on like the 5-minute time frame. But ultimately, the relative strength index did see bearish divergence as we hit our targets, and we've moved down quite nicely. This is actually showing that momentum has shifted to, at least from bullish to bearish, and at the same time, it's also in a position where we might start to see reversals as well, and we start to see more growth. So we'll keep an eye on it. The MACD histogram shows a lot of sell pressure as we hit those highs. Again, this isn't necessarily bad. It's just showing you that momentum is shifting from what it was before. So for ADA on the smaller timeframes, expect just more volatility. And the move to the upside, the recent highs, they at the moment look like they're going to hold. And we are going to be experiencing more accumulative times. Anyway, let's move this up to a daily time frame. Because on the daily time frame, we can really take stock of the situation, right? Our move to the downside might not yet be complete, and we could see further decline. At the same time, though, after completing the 5-wave move to the upside, we actually start to think actually we might be looking at the next big run for our C-wave structure, right? Now we are tracking an ABC pattern. Now an ABC pattern consists of 5 waves up and 3 waves down, followed by 5 waves up. Now this is a larger scale, it's on a daily time frame. And that 5-wave pattern that we tracked over here, this is just wave 1 of our 5-wave pattern. So what we have tracked so far is the wave 1. This is the wave 2. And that wave 3, by the way, guys, is going to be at least 1.618 times the wave 1. Then we're going to correct down and then we're going to push back up again. Now, all of that can be just complete at a really low level, although typically it would be higher. And that is why our targets are $1.56.25 to $1.84.19. Now, those are the targets as per the Elliott wave Fibonacci levels, right? We don't just make up the numbers. We don't just pull them out of thin air. They are based on the relationships between all of the internal workings of everything else that we see. So for the most part, that's kind of what we're targeting here for ADA on the kind of medium term. But in order to see all of that, we do need to live out some of the natural healthy corrections along the way. So although we have had a recent high, we hit our targets, those are just wave 1 of potential wave 3 of our wave 3. It's kind of like nesting inside each other. It's like Russian dolls, essentially, right? So for the most part, we're tracking quite nicely here. Now, our stochastic RSI on our daily time frame has got more room to grow now it bounced from the 50 level. This could be a place where we start seeing more growth in ADA's price action on the daily time frame. It does not negate the smaller time frame micro movements, but it just allows us to see progression on a bigger macro piece. Now, if we turn off the stochastic variation, bring in the relative strength index divergence indicator. Now here you can see we had bearish divergence on this A wave high, right? And we start to see here that we have started to pull on back down. Now, this is actually in a good, strong area, in my opinion, right? Let me show you kind of what I'm looking at here. Over time, we have basically gained strength on this relative strength index, right? As we started to push on up. Now, at the same time, as we started to have these kind of peaks, wave 3 peak, for example, and the wave 5 peak, we started to actually lose some of that momentum. But at the same time, we still got a solid floor. So this shows that actually we're gearing ourselves up for a breakout situation, in my opinion, on the daily time frame. We just need to be a little bit more patient because yes, it's been great over the last few days, but it's just the beginning of something much, much bigger. So time and patience, these are the 2 messages that I kind of want to convey today, right? So if we can do that, then I think we're going to be in strong positions. The MACD histogram shows a very similar story. Okay, so what do we see here? Well, we can see that there is still weakness within the buying side, but at the same time, there's also weakness within the selling side. Okay, as we're having this correction, as we're trying to get this breakout, we still haven't got the sentiment behind the community to actually finish the job. So although we've had a good strong run and while we're starting to see a pullback, it's just that the market's not yet ready. So again, I'll come back to patience pays dividends. So all in all, I'm not terribly too concerned over the things that I'm seeing in terms of the data when it comes to Cardano's ADA. We've hit the targets. Everything is still very much valid and we have longer term targets. If I zoom out far enough, guys, you really start to get into an idea of what's actually at stake here. We are talking significant breakout targets that still are on the radar, yet they are going to be quite a way out unless, of course, we start seeing significant reasons for demand to increase. ETFs or retail kind of starts flowing in after, I don't know, some altcoin season starting, for example, right? So once we start seeing a demand kind of picking up or the supply shrinking for whatever reason, an ETF does both of those, then it could be a fantastic catalyst to get us out to these previous highs and into new all-time highs. On the low side of my conservative range is $3.09 to $4.77. On the median, I have the $5.27 to $12.91. And on the pure hopium-fueled rally, you know, the Simoon boy kind of targets, they sit between $38 and $130. Now, I will put out there that this basically is the moon, and there's no guarantees that we get anywhere near the moon, right? So just be very much aware that that's just pure hopium. The median targets, though, those are actually quite realistic in my humble opinion. Between $5 and $12, yeah, I could take that. And on the low side, if you're super conservative, up to about $4.77 also seems very, very realistic in the longer term. So we're just playing around with some volatility on the smaller timeframes. But on the bigger macro piece, everything is building out towards these bigger, significant breakouts. We just have to zoom out in order to see it. Now, I'm going to leave this there. You can let me know your thoughts in the comments below or join us in the free educational Discord. The link is in the description and we can continue the conversation down there. But if you found this useful, informative, smash the like button, subscribe for more, and I'll catch you all in the next one.